I've got to ask about the risks now after the opportunities. Gervais, what are the risks that you're concerned about at the moment?
Sort of, I touched on it a little earlier. I mean, the nightmare is that we haven't really been through the crisis yet. Unfortunately, we all know individuals who go bust. There will be a lot of companies going bust. This will lead to bad debts for other companies. It'll lead to banks having write-offs. It'll probably change the behaviour of banks. They'll be more reluctant to lend going forward. And it may be even that though interest rates won't rise, the cost of borrowing may rise because the banks become more prudent. So I think there's a really nasty aspect, which unfortunately is still to come, which is going to hold things back a bit. So stock markets may not continue to rise. They may peak out and drop back again for a second bite of the setback. So from that point of view, we're just not sure about the steady recovery we're seeing in the markets. It may be that there is a bit more fluctuations before we get to the end of the crisis.
Okay, some more tough times to come. Francesco, how about you? What risks are you concerned about? Are you concerned about companies going bust?
I think, yes. I think the difficulty will be for companies to manage their cash flows because take a car components company. They are starting production now, but how do you optimize your production when you're working at 30, 40, 50, 60% capacity? So really very difficult times, I would say, for sort of manufacturing companies to come, and service companies indeed as well. On the other hand, there is this deluge, avalanche of cash that has been thrown onto the markets from central banks and governments, which has to find a home. And so I think growthy companies or companies that are reasonably defensive in this environment and will continue to grow, will continue to probably expand their valuations.
Right, yes. Well, I can see it's going to be very tough for those sort of automobile type companies. But, some possibility of that happening. Hugh, in terms of your risk, what do you see?
Well, in many ways, there does seem to be a divorce between stock markets and the real underlying economy, which is still going through a tough period. Yes, it's gone through a really tough period. It's opening up again across Asia, but it's not a V-shaped recovery by any means. I mean, I think we're going to see a subdued economy into next year. And of course, stock markets have assumed, well, whether they've assumed everything's rosy and going to revert quickly, or indeed whether it is that effect of all the money that's been pumped in. There are clearly going to be casualties amongst small and medium-sized enterprises, and well, there've been the odd big casualty, of course, as well recently, and that's going to affect the banking system, and that will affect the broader economy as well if the banking system really tightens up. So I think we're far from being out of the woods. So I'm intrinsically cautious, but in a sense that caution has held me in good stead over the last 30 years. I'm a pessimistic optimist or an optimistic pessimist. I'm not sure which I am.